Morning, Ashley.
Hello. How we doing?
Good. How are you?
Not too bad. Not too bad.
You like the music, eh? It's
Uh,
so many times we listen to it, and you always dance along.
yeah, I love that. Yeah, the Pink plays the creme for me, man. It's just gotta love it. Yeah, it's really good. Gets me pumped.
Mm-hmm.
So how was your week?
Uh, very panicky. It was very panicky.
Yeah, I bet. So anyway, welcome everybody. Today is March 1st.
March 1st.
Wow, doesn't time fly? March 1st, 2025. Actually, our weather's quite nice out there today.
Yeah.
Not rainy, kind of nice. Yesterday was nice. So we're gonna discuss moving forward our little structure that we're gonna create, just to kind of put some structure on it, right?
Yeah. Very nice structure. We worked on it.
Yeah, yeah, and just to kind of let everybody know what we're going to do and how we're going to do it, because this is the journey. Do you have that graphic? Can you stick it up there? There it is. So the trader's journey. Well, what is the trader's journey? There it is right there. We talk about the three pillars. I talk about the three pillars, and basically macroeconomics, fundamental data. GDP, gross domestic product, is the measurement of the economic strength or weakness of a country. The macro. If you guys don't know what macroeconomics means, go look at the Fed website. They have it right there. It's explained to you right there.
If you
You
don't know
know,
what it
it.
means, Google it.
No, don't Google it. Go to the source. Go to the Fed.
Oh, okay.
Go to the Federal Reserve Bank,
Mm-hmm.
and it'll tell you. This is what blows my mind, is that people say, "Well, how do you get that information?" Go to the source.
But this one
You,
explains it very well. This
well,
graphic here.
it does explain it, but still, people ask me, "Well, what is macroeconomics? What does it mean? What do you mean?" Well, you're looking for macro is large scale, right? Macro, large economics. So you're looking for what is it that's affecting the economic outlook today, right? And we look at gross domestic product, inflation, all these stuff affects GDP. So GDP is the main. But what are the drivers that are changing it or making it? An example being, we've had the last 3-4 years with inflationary issues. So what's driving the strength or the market itself
Mm-hmm.
is the inflationary data. So the macro is inflation. So anything inflation related, and we look at PCE, right? And you know how does the central banks control that? We should actually add central banks into that
Mm.
little column right there. We didn't. It's my fault. I didn't really add it because that's important. Monetary policy is important, so we could probably take out those other little ones and add that. We want to keep it on point because this is what we're going to be discussing. You see, the whole thing of this journey is understanding how you look at these things, right? And the biggest challenge that I have come across with traders, and probably even myself, although I was maybe a little different because I'm a little bit of a geek about it. It was never about making money for me. Let me reword that. It wasn't only about making money for me, it was being the smartest guy in the room to understand what's going on. I'm not going to lie. Ego a little bit and say, yeah, well, I know what's going on. You don't know. You're full of shit. And the reason that is because there's a lot of conflicting information there. So you'll go to somebody else, they'll say this, you go to someone else, they say that, and you don't know what is what. And this is, in my mind, one of the biggest challenges new traders have is there's so many people you can listen to, you can't sometimes make the right decision. So that's why I encourage them all.
Mm-hmm.
And go find out yourself, read it yourself. And yeah, I'm telling you this, I'm giving you my advice, but I'm giving you my advice based on my journey,
Hmm.
based on what I did. And I mean, it sounds maybe counterintuitive and maybe it's a little hypocritical, but the point is I don't have any agenda. The only agenda I have is trying to move the needle for you, to move you forward. So rather than you go watch a YouTube video on a guy talking about this, right, go to the Fed.gov website and look up what is macroeconomics, what is the monetary policy, what are they looking for, right? This is where I get all my information from. Now, do I go to other sites? Yes, I do, because at the end of the day, you've got to understand it on how it relates to the markets. So it's not just knowing what it is, how does it relate? And that's where you use the technicals to find price movement based on market structure and market sentiment. Market structure, what is that? Well, it's a characteristic that's created based on maybe the workings of the Feds moving, doing certain things within their toolbox to increase the value of a currency. So it creates a pattern, it creates support and resistance levels, you know, and we call that price action, right?
Hmm.
So market sentiment, with all this, market sentiment to me means what are the traders doing? And that, we can actually kind of talk about that this week because it was very kind of up and down this week. It was all over the place.
The price
And
action.
market, well, not no no not the price action itself, because remember, price action comes from market sentiment, right?
Hmm.
Of what everybody is doing. The big guys, and I talk about big guys. I don't talk about the retail guys because we're only 5%, if that. So I mean, investors, what is their job? Their job, like we're talking big hedge funds and big companies trying to, um, you know, get a better bottom line, right? And they're investing in the market, so they make decisions, and they make decisions on looking at the data, looking at what's going on, looking ahead, right? What is the Fed doing? So then they determine, oh, this is what we're going to do. And we have to piggyback on that. And we use the technicals and identifying price movement and market structure. And we look at the sentiment. Oh, if we have a bias to the downside, but market sentiment is to the upside, we know that that's a temporary move, right? So
Hmm.
we don't, I've talked about this all the time. I create a range, right? I create a market structure range of where I believe price is moving. And that's what you have to do of understanding the charts. I mean, we did a big deep dive into Meta, and everybody should know by now I'm a level guy. And I go, and this is great because it's March the 1st, so I can do that video I've been telling you about that I'm going to do on defining the levels on a monthly chart. And
Uh-huh.
now the month is closed, and a new one is going to open tomorrow. I can do that recording today,
Hmm.
so you'll see it in true time exactly how I go about it. And I think we've decided that we're going to look at Nasdaq, S&P, uh, U.S. dollar,
Gold.
gold, and what was the other one?
Maybe one extra that maybe it's like maybe we can be
Oh,
it
one
can
of
be
the week or something. Yeah,
yeah.
yeah. Okay, yeah. So basically, we're going to be running that, and I'm going to be doing that. Sorry, I'm getting all tangled here. So it's like,
Yeah.
so so then that's what we use the charts for. And I know there's so much with the charts. There's candlestick formations. There's this. There's patterns. Uh, there's a heck of a lot. I do get it. Then it brings me to the third one, the third pillar. And believe it or not, guys, this is the most important one. And I know you don't think it is, but it is. Because you, as the trader, right, your success is completely 100% reliant on how you follow those three things there: preparation, planning, and mindset. 100%. And I know there's psychology added in there. There's a risk to reward, and there's so much. But just simply, if you're going to have a good risk to reward, that should be in the planning stage. That should be in the preparation stage, right? So we want to use this avenue, this podcast, as a way to go through these three concepts, these three pillars, and to help you along with your journey. So that's how we're going to do it. So we're going to talk about some kind of fundamental situation. We're going to try and get questions about that. What is this? What is this? What's going on? And obviously we'll look at the charts, and then we'll look at something that pertains to you as the individual. Maybe it's a mindset situation, a psychology. Oh, I think we got a good one for you this week, because we're going to put Isaac right on the right on the block today.
What
with
happened?
that. Well, you tell me what happened to you last week.
Oh,
Yeah.
yeah, 2 days ago.
Yeah. So we can talk about that. So that's what we're going to do moving on. So look, I got to keep encouraging you to send questions, because questions are great, because you can ask a question, we can cover a topic, and you don't even have to put yourself out there if you don't want to. Because I know sometimes it's really kind of daunting to put your name to a question, because you may think it's a stupid question, or you may be judged on it and stuff like that. And for some reason, this trading world is so fucking judgmental. It's not funny. And it's like, and most of the time it's judgmental from people that act like they're making tons of money but haven't made shit. So it's tough. So yeah, I don't think I need to thrash that out anymore. I think that's good enough, and yeah, we can move on.
Okay, let's
So
get started.
yeah, so what's on the agenda today?
Oh, that this is our best agenda so far.
Yeah,
Macroeconomics,
that's pretty good. Yeah.
macroeconomics, GDP,
Oh, you
interest
wanna?
rate, inflation, unemployment, PCE, etc. Central banks. I think you are the expert on this one, so I have very little knowledge.
Well, I think it's more of an understanding of what it is,
Yes.
right? I mean, and as I said, like, you have to understand what moves the market, and you know I understand when people say, "Oh, you put a line on a chart. A line doesn't move the market." No,
You
no,
know,
it's not that. It's not that.
do
Yeah,
you
go ahead.
do you think we can even add the word news on this first pillar?
Well, fundamental data. You can. Let's take
Yeah.
out PCE, because we've already got inflation, so that's kind of an inflationary thing, right? I think to me, it should be central banks, monetary policy, and the economic news. I guess you could say that, because central banks are really important.
Yeah.
Uh,
But what I mean is that like we can when we cover this first pillar, we will be like really basing on the news of what happened in the week, right?
Well, we could, yeah,
Yeah.
you could do it that way, but maybe someone has a question. I just don't understand inflation. I just don't understand why. Here's a question I get a lot. I get this a lot.
Mhm.
Is why, if we have high inflation, why is one of the tools of the central banks to increase interest rates? And I think you asked me that question a long time ago. Why does that happen, right? And I think people don't understand the connection of what it is that's happening. Okay, so let's have a brief understanding on inflation, right? inflation is not good because inflation is what? The increasing of product prices, right? So that means we have to pay more for a product, right? So let's try and understand what moves prices, what affects prices. Supply,
Supply.
supply. What's the
Demand.
other one? Demand, right? Supply and demand forces move prices. So supply and demand can be affected by what? Well, there's a number of things it can be affected by. What could it be affected by?
Tariffs.
Yeah,
Yeah.
added tariffs. Yeah, but
Labor.
let's
Can be labor. Can
right
be the raw materials.
increase in raw materials.
What else?
But
Weakness of a currency.
well, let's look at it in the simplest terms, right? Supply chain.
Supply chain.
So that covers everything you just said. Supply chain can affect the supply of a product, right? Yes, makes
Yes,
sense.
yes, yes.
Right. Okay. But what affects demand of the product?
I guess people wanting the product, the people that
Yeah.
want.
So if the price is higher than they want to pay, that is going to. Oh, actually, that's great. You got all this. Yeah.
Yeah, I
I
wanted
just
to
see
put
a
it up
nice
there.
graphic there, right? Yeah. Yeah. Supply chain management, right? So
Yes.
what you're kind of going exactly where I was going, right? There it is, supply chain, right? So you got the manufacturing, the distribution, retail location to the customer, raw materials, supplier, and manufacturing. All those affect the supply, right? So how can the government control inflation?
How can the government control inflation?
Yeah,
I
how
guess
can
keep.
they?
hmm
Yeah.
Mm, it's a tricky question.
Well, yes and no. The thing is, let's go
I
back to
mean,
the beginning. Well,
making it as easy as possible for the producers to produce and for the customers to buy.
all right, let's just go back to the original question that we're talking about inflation, right? Why is it that when there's inflation, the central banks increase interest rates? Why? That's the original question, right?
hmm
So now we're looking at the act of the supply chain and the supply and demand of a product. Now let's break it down really simply, okay? You have a product that you supply,
hmm
right? And there is a demand for your product. So you have made 100,000 widgets, right? And everybody's buying your widgets very happily. Now, all of a sudden, the demand is getting greater, but your supply is getting lower. What would you do as a business owner when you only have 30,000 widgets left? You got to do two things.
Yeah.
You got to go order more widgets,
hmm
right? And you've only got a limited supply, so you should raise your prices.
hmm
That's a standard economic 101,
hmm
right? Well, the demand is high, so I'm going to increase prices because you're a businessman. You
Yeah.
need to make more money, right? Now let's go to the order more. If you try to order more and your raw materials have gone up, right? Now the cost of you producing the widgets has gone up. So what do you need to do again?
Increase the
Raise your
price more.
prices. You're
Yeah.
starting to see this, right?
Yeah.
So now the demand is still there.
Okay, but
So
sorry, why would the raw material go up?
that
Because
doesn't matter.
doesn't matter.
We're you don't want to go into a rabbit hole here, right? I'll briefly say it. Raw materials can go up for several reasons, right? The fact of the matter is the little copper ring that you buy to make your widget has gone up in price, right? If you look at that graphic
hmm
you showed, right? The supply chain management there. We bring it up.
Yes, sir.
look what it says, right? Raw materials. Boom.
Yes.
If the raw materials are copper and the copper has gone up in price, that's going to cost more money. Supplier, right? Maybe there's more demand from him, from other people want copper, right? So it's gone up. Manufacturing, maybe the hourly rate has gone up to produce manufacturing. Maybe the heating's gone up. A lot of factors. Do you get it?
Mm-hmm.
Right? Distribution, fuel has gone up, increase, whatever. Wages have increased. Doesn't matter what it is. The point is that when you order more, your expense has gone up.
Mm-hmm.
Make sense?
Yes.
This has now caused inflation on your product. Your product now is priced higher, right? So now your widget, you still got demand, right?
Mm-hmm.
So a lot of these people that are buying your product maybe use a credit card, right? And they want more. But all of a sudden, if they use a credit card, if their interest rates go up, it's going to cost them more money.
Mm-hmm.
You're starting to see what
If
I'm
the
talking about?
interest goes up.
Yeah. So the only way the central banks, the Feds, can stop people purchasing is making it more expensive. So they increase the interest rates to make it more expensive to them to purchase. Does
Increase.
that make sense?
Okay, okay. Increasing the interest rates
Yes,
because that will make them pay more money, and people don't want
exactly.
to pay more money.
Yes. So
So.
what does that mean with your widgets? Well, now people are not going to pay that higher price. So you've raised that price accordingly. You got to go, oh shit, no one's buying. Damn.
Mm-hmm.
What do I do? What are you going to do as a businessman?
Lower the prices, I guess.
There you go. So you're going to lower it a little bit,
So
right?
inflation
And
comes
you're going to
down.
hold, yeah. And that's caused strictly by inflation and the Fed's increasing interest rate. Does that make sense?
Yes.
We were
So.
very quick. I mean, we could go real deeper, but all I wanted to do was try and understand. Look, this is all logic, guys. This is all logical. But the problem is, you're looking for some kind of magic, amazing thing that you can look at an indicator on a chart to help you decide all these things. It doesn't happen, right? You've got to understand how the economic world works, how the world works. And if you have, okay, farmers are a great example, of like, crops and, producing crops and stuff like that. Their stuff can be affected because if their crops are no good and they don't have a lot, they can't sell, they can't sell enough, right? They got to buy seeds, maybe seeds. Like there's a lot of things, a lot of factors,
Mm-hmm.
right? But the most important part here is to understand why the Fed's tool to combat inflation is to increase interest rates. That was what we started with.
That is their tool.
Yes,
Do they have more tools to fight
of
the
course
inflation?
they have a ton of tools for different things, but I don't want to go over that.
Okay,
I
okay,
just want to
okay.
focus,
All right.
right? We want to keep it simple, right?
Okay.
Does that make sense?
Makes sense, yes.
Right. So now when someone says to you, oh, inflation's, yeah, you're going to expect that there could be an increase in inflation. What have I been saying to you for the last 8 months? I said, inflation's still here. Inflation's still there. I wouldn't be surprised if they raise interest rates. I
Yeah,
have
but
said that.
we just got released the PCE data, no? This is
Yeah, we
was it
did.
on
Yeah.
Thursday or Friday?
Yeah, let's have a look at it. Let's have a look. I'll share my screen with you.
And this product consumer expenditure, is it? PCE is
Personal. Yeah,
personal consumer
personal.
expenditure. Okay,
Yeah.
and it was lower than a little bit lower than expected. No, is that correct? But we'll see.
Can you see it?
Um, You're not
Oh,
sharing
I
the
guess I got to
screen.
share my.
Yeah.
Here comes the technical. There we go. Okay. Should be good now.
Yes, good.
You got it? All right. Okay. So I only look at the red, as you know, but we got core. See here. Let's have a look here. Actually, I want to,
Core
so I don't
PCE.
make a mistake here. I want to do it all. So
Yeah, Core PCE was yesterday before market
yeah,
open.
yeah. Yeah, but I want to show you something else too. I want to show
Mm-hmm.
there's something else. Okay, here we go. Like personal income and personal spending is another one that a lot of people like to look at, but it has a very, very little
Impact.
impact inspected, right? But when you think about it, personal income is actually pretty important
Mm-hmm.
on the grand scheme of things. I think this is more important than consumer sentiment, that's for sure. Like, we talked about that last week, right?
Mm-hmm.
What was that, consumer or whatever? And I said 3,000 households. Like, I don't get that. But anyway, I wanted to show that. So let's look at this one here. So core PCE, no movement, right?
Mm-hmm.
Stayed exactly where it was, right? Forecast 0.3 points. But look, it is an increase of 0.1 because previous was 0.2.
Okay,
So
that's an increase. It means people are spending more. Is it?
yeah, look.
Okay.
So the change in the price of goods and services, right? Excluding food and energy because it's very volatile. So basically, actual grade in the forecast is supposedly good for the currency. That's another conversation we can have, reason why,
Mm-hmm.
right? Because that is now the opposite side of things, is because if if people are spending more money, what does that mean for the economy?
More money is flowing.
So it's good for the economy, right?
Yeah,
And we
sounds
want
like
a
it.
good economy. Yeah, right? But remember, there's a fine balance on what's good and what's not good. And the Fed has put in a 2%, right? 0.2% as their goal,
Uh-huh.
right? So we're above right now. So now you look at previous, right? And look at, from September, you can clearly see from September 24, oh, we can even put more here. Let's put more, right? So look how sporadic it is, right?
Mm-hmm.
But look at the last little while, right?
Mm-hmm.
Point one, point two.
Well, it
This is
doesn't
so this.
seem to be changing that much. I don't know if like what's is it really a big impact on point one?
When you got what is it, $29 billion economy or whatever it is, how much money they bring
Mm-hmm.
in month to month, 0.1% is quite a lot, right?
Mm.
The fact is, it's getting more expensive to buy shit, right? However, for me, I'm going to go back to the other one I was telling you about. Remember, it's costing more to buy shit. And when do you expect people to spend more money? Christmas time, yes or no?
Yes, yes.
Right. Okay. So in January, you expected it to be a little higher, and it was. But look, February.
February was
So this
higher.
January is for December. So February is for January. Like, why is it higher? It
Mm.
should be lower here, right?
Mm-hmm.
People shouldn't be spending money. So I go there. Look, I am gonna not lie to you. I'm a logical guy.
Mm-hmm.
I try and use logic. So I go down to this one here,
Mm-hmm.
and I look at personal income and go, holy fuck! Look at this jump.
Mm-hmm.
Look. Now I know personal spending is down 0.2, but that seems really weird if you've got PCE up. So
Yeah,
look
but
at this. So
personal
personal
spending.
income
Mm.
jumped.
Uh-huh.
So if you've got more income,
Yes.
do you have more money to spend?
Should be, yes.
So then should we be worrying about this? Right? Do you know what I'm saying? Like, we expect this then, right?
Yeah, it looks normal. Yeah.
Yeah. So again, it's about not freaking out about what you see on that day.
Okay. But I mean,
So
to me, it sounds good. People have more money. Like there's, I mean, yeah, that to me it just sounds good. No.
100%.
Yeah.
But you've also got to realize that what's the Fed's target?
Uh huh.
It's 2. They're now over. And, when you look again, looking at this, right? December, November. Okay, December was a little low. January, December 2, and then you're back to 3 again. So if you look over us, the last 6 months, we're not really making much progress of getting inflation down.
Mm.
So that's my thing. It's like, okay, hold on a minute. But you remember me talking about the Goldilocks economy?
Yes.
Seems like we're still in it.
We're still in it. Could be, yeah. That.
Yeah, it could be, right?
Mm-hmm. That kind of
So then
relates
we
to I was gonna ask you about later on after we cover this macroeconomics, maybe when we go to the technicals.
Yeah.
That I don't know. I've been kind of freaking out. Like it's I don't know if some people say, oh, we're about to go into recession. Then maybe it's a correction on the market. What's happening in the market in the general, the S&P, the Nasdaq, that we had a big pullback and the whole market was in the red for several days. I was kind of freaked out.
Yeah.
Yes, but yeah.
But what have I been telling you
You said
for the last 3 months?
You said that we were overextended and we have to calm down.
And what's happening? Coming down.
That's coming down.
And why is it the ideal time to come down? We're in a new year, a new administration, shit going on. So we need to come down. Why do we need to come down? Okay, again, what are the stocks made for?
To go up.
They're made to go up, right?
Yes.
Okay.
Over time.
Now, trading is about buying and selling, yes?
Yes.
All right. So what is the first principle of buying?
Buy when it's low.
Uh-huh. Are we low right now? Or
to me, we are low.
no, we're not low. We just had a little pull. We need to get a little lower, right?
Is it?
So, okay, you can have a bias. It doesn't mean to say it's right. So here's my take.
And I think here's also comes to your experience as a trader, right? Because for me, in my less than almost a year of experience, I think I haven't seen a pullback this big. So I think to me my normal reaction is to be like fearful, right? And think that, oh, this is probably and like enough. This is good enough. This is the correction is done. It's not gonna go lower, but it could go lower, of course.
There you go. You just said it. There you go. You don't know.
I don't know.
And that's the key.
But
the key is you don't know. Right? So now you have to be logical. What does the new administration want? What does Trump want? Lower interest rates, right? He wants to get rid of the dead weight of people working that are not supposed to be working. He's trimming the fat. He's doing everything, right? Why is he doing this? Why do you think he's doing this? What is the reason he's doing this? Because everything is too high. Everything's too high. We got to get it down. We got to push it down. And he's doing it aggressively instead of behind everyone's back. He's being very open about it.
Yeah.
And this is what he wants. And why does he want tariffs? Because he's pissed off that they charge him taxes. Right? Even though, in most regards, when you pay taxes, you get them refunded back anyway. So it's like, like corporate taxes and stuff, you can do all kinds of things to get that back, but that's another story. The point is this, is that sometimes we don't need to get overwrought with the yappity, 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 yap that's out there. This is what happens. And people go, oh, we're going to be in a recession, blah, blah, blah. Get everybody fearful, get everybody panicking, get everybody running like lemons. Just sit back and enjoy the fucking show, everybody. That's it. Just enjoy it, embrace it, and follow it. And lay down those lines in the sand, right?
Yeah. You see my screen?
Yeah, extreme fear.
Extreme
Yes.
fear. Oh,
Yeah, absolutely. And you know what? In 2 days, that could jump right up to greed. You never know.
yeah.
The point is that logically there is a correction. And remember, I said to you, and we got to go back to what is it, the Magnificent Seven again? Is it or the Fab Seven? I keep forgetting what you call it.
Magnificent, yeah, magnificent.
Magnificent Seven. Okay,
Not so magnificent, not so magnificent lately, but
no,
yeah.
of course not. But remember, I said when you told me that Zuckerberg was going out and pumping up his business and saying how great it was, what did I say? My next sentence. Do you remember what I said?
He's I don't know the words exactly, but you predicted it very well. Like he's pumping
I
it and then
said,
he's
oh,
dumping it.
yeah, pump and dump. I said, classic pump and dump.
Classic pump.
And look, I'm not trying to say that I know more than anybody. I don't, right? But I know psychology of people. I understand how people think, and I understand reactions, and I understand what's going on. And why? Because I've seen it. And I remember I said to you, if the price stays below here on here, and you said, well, what if it goes up? I said, well, then it goes up. I was wrong. And
Yeah.
you kind of laughed, you kind of chuckled. And I said, I don't care if I'm wrong, Isaac. It's not about being right or wrong. It's about making money and helping people understand where they need to put their lines in the sand and what to look for. And I said, because I like to think that I helped you with your 20% on Meta, because I don't think if we hadn't had that conversation, we didn't go through anything, you would have kept your trade on,
Yes.
and you wouldn't have taken it off, right? So, and I think you have started to understand. Shit, market sentiment is everything. We can talk about all this stuff, but the sentiment of the market, of how people are and how they trade and everything, that's it. Because you and I cannot make a difference in the market. Whatever we do, our little paltry little trades doesn't move it at all, right? But the collection of the big boys and all the other people trading, they can make a change. They can do something. Does that make sense?
Yeah, 100%. It's
Yeah.
yeah.
So I have
The
what?
narrative,
See that?
that it's
Yeah, but go back to that. Go back to that graphic again. Look what it says. The trader preparation. How much do I prepare?
you
Yes,
every day, yeah. You prepare every
my
day.
preparation is solid. And look at the last one. Planning. My plan is set out before the week, guys. Set out. Everything's lined up. Everything's done. I know what I'm doing. I know what I'm looking at. Right? But I'm also adaptable to the market. But the last one, mindset. Do you think I have a strong mindset in trading?
Yeah, I think you do.
Because, yeah, if I have a loss, doesn't bother me.
Hmm.
Doesn't bother me. Because I know I've prepared properly. I've made a plan. I got the right mindset to understand that even though I believe my plan is there, I've got protection in place because I know it can go different. So this is what I do. I'm not an economist, right? But there's one thing I believe I know is I know people. And this market is made up of people. It's made up of the psychology of the human being. And that's what marketing is all about. That's what buying shit is all about. That's what selling is all about. That's what instant gratification is about. I understand all that shit. And that's how I make my decisions. And when I get to things like, oh, what's your win rate? What is your,
PL ratio, more or
yeah,
less.
what is the win loss rate? What is your risk to reward ratio? Who gives a fucking shit? It has nothing to do with anything. I'm not running a prop firm here. I'm not reporting to some arsehole on his ivory tower. I'm reporting to Me Inc. It's me. Yes, it's Me Inc. It's my fucking business. It's me. So if I'm in a trade and I'm going up and I've made, I don't know, $1,000, $500 or whatever it is, and I'm starting to see things go a little bit the other way, and I have my tools, trend lines, lows. I have them. If I see that, I get the fuck out. Why? Because I just pocketed $800. Do I care? No. Oh, well, your risk reward ratio is only 1 to 1.2. Fuck off. Right? At the end of the day, it doesn't matter, because you know what matters at the end of the day? My P&L and my account. And no one's going to look at that and go, oh, well, what was your risk to reward on all your trades? Who gives a shit? Doesn't matter. Do you think your wife or your girlfriend or your husband is going to turn around and say, but hold on. Well, we got 10,000. What was the risk to reward ratio there? What was that? No, they're not. Seriously.
Yeah, no, I
right?
understand. I understand.
So you get these guys, these educators out there making a big fucking deal out of shit that you don't need to make a big deal of. And, I know I'm opinionated. I know I am. But I'm opinionated for the street guy, the regular guy. The guy that's busting his fucking ass to try and figure this shit out, right? And you're getting crap by these people. Look, do you know why I get mad? Because I spent thousands of friggin' dollars. And I realized if I'd have done this way, I wouldn't have had to spend thousands upon thousands upon thousands of dollars on my education, right? I rolled up my sleeves. I'm a guy of hard knocks. It's like, but the difference with me is this, is when I get a knock, I use it as a lesson, as a training. Okay, what happened? That's why I take that information and I put it in a daily journal. Mm-hmm. And I look at it later. And then when I see over time and I see, I've seen that before. Oh, I see this. I think, you know what? I'm uncertain. I'm not sure I'm getting out. Have I missed money before? Have I left money on the table? Yes, 1,000% I have. But I don't care, because tomorrow's another day. The sun will come up, or it'll rain, or whatever, and the markets will be open again. The market will be volatile, it'll be fearful, or it won't be. It'll be what it will be. 6 months ago is a different environment in the trading world, in the trading market, than it is today. 3 years ago, totally different, right? There's a lot of the things you have to understand with trading is you can have a plan, you can have a preparation, and you can have a strategy on how to trade these, which I do. But you have to learn to be adaptable. My strategies are based on first principles, highs and lows. That's it. And I simplify the whole thing of like, well, if I'm going up, what does that market want to do? It wants to make a higher high. That's it. Right? Is it going all the way to this level up here? Yeah, it could do. Yeah, but it may need some help. It may take some time. Right? And that's why patience is the big thing that everybody struggles with, psychologically wise. You have to be patient, because you're in the market. You're like, oh fuck, I'm down. I go, Jesus Christ, what's going on? Oh, manipulation. Oh my God, right? It's no, you just, sometimes you're not at the right time. And it's like, I have a saying when it comes to having patience, mm-hmm. right? So if you're patient, right? If you're not patient, right, and you make a mistake, you know where I'm heading here, right? And you make a mistake, right? It's painful, right?
Yes.
And you have regret, mm-hmm. right? Fuck, I should have done that. Oh shit, I should have done that, right? So here's my saying, and I think you guys should all write this down and stick it right on your computer, on your mirror in the bathroom, and see this everywhere. And by the way, this is for life too, okay? All right. So to avoid being frustrated, right? So, or have the pain of regret, because it's painful. So I will accept the frustration of patience to avoid the pain of regret. I want that to sink in a little bit, right? I will accept the frustration of patience because being patient can be frustrating to avoid the pain of regret. Now, Isaac, I'm going to put you on the spot. Did you have some pain of regret this week?
Yeah, I had
Would you like to share your pain of regret?
Yeah, sure. And also, I think, well, first, I think we covered, okay, we covered some of the macro, some of the trader the mentality, the planning, a bit of your mindset.
Yeah.
And then we can maybe cover some of the technicals, if
Yeah,
that's
because
okay.
I wanted to go back to meta again and just kind of
Yeah.
go back over that because that was
Yeah.
but
You know what? I failed. I I had the same mistake again, and I hope this is the last time. And you know what? I also, when you were just mentioning, I haven't done my trading journal. I don't even know where it is. I think it's somewhere, but I stopped doing it. And
what,
I need to retake it.
what's a trader's journal for you?
What do you mean?
What is a trader's journal? What is that? What is it to you? What is it?
It's a little notebook that I write what I do. What do I do? And
What do you do with what?
what's my lesson of the trade?
Okay, so that's a daily journal.
It's also my trading journal because I wrote what trades I entered and why it went good and why it wasn't good.
I would split them up.
And yeah.
Yeah, because the trader's journal is to keep you disciplined into your rules.
Mm-hmm.
So when you have a trader's journal, so you're entering your trade,
Mm-hmm.
and what you're doing is it's like a flight checklist in an airplane,
Mm-hmm.
right? So the guy goes through it,
Mm.
flaps, this pressure, this.
Yeah, yeah.
So
I understand.
you're looking at it. I'm looking at this trade. Why am I entering? I'm entering because this. I see this,
Mm-hmm.
and I waited for this. My support level is here. I've got a resistance level here. This is my target. This is the reason why I entered here. Followed my entry rule. Everything is good. Great. Then it's not just this. It's not just the entry and the stop loss. You've given the reasons why you believe that it's going where it's going. Now you have management, right? Because sometimes your trades are not 15 minutes, they're not 4 hours, they're not daily, they're weekly, they go for a period of time. And you will look at the market, so where am I going? What's going on here? What's happening here? And you need to log and say, oh, I'm up 60 pips, I moved my stop loss. I did this, I did this. And this creates your trading plan, right? Because as you keep doing it, oh, yeah, this was good. This was good, I did this. This was good, I did this. And it starts integrating into your plan. Now, the daily journal is you creating those habits of putting the trading journal correctly and developing your trading plan. The daily journal helps you with this by you documenting your day of what happened, what did you do, what didn't you do, and how you can correct it, and what you learned. Does that make sense?
Makes sense.
Right. So, sorry, didn't mean to interrupt you. Carry on.
I didn't put a stop loss. I didn't put a stop loss.
Oh, shock and horror! You didn't
Okay.
put a stop loss.
I
Oh
didn't
my
put a stop
God.
loss. I was greedy. I was
Oh my.
greedy. I found, and let me tell you, I found gold. I found a gold mine. My gold mine was the S&P 500 by itself. I was trading Meta. I was trading Nvidia. I was trading Tesla. I was trading all the big tech stocks that I like and I follow. And then I was like, this week, I think it's this and last week, because I've been following more closely the S&P 500 because it gives you
Yeah.
a better understanding on the market is on an uptrend. Now it seems like it's doing a correction. So I was like, okay, then I was paying more attention to the S&P. So I was like, oh, maybe I should trade the S&P. I defined my levels. I did a good technical analysis and also fundamental because I was trying to understand what's happening in the world and why this correction is happening. It's on a correction mode. So I was like, okay, I'm gonna trade it. And then I did it for like 3 or 4 days, like Monday, Tuesday, Wednesday, and it was really good. And I had the stop loss. I did have the stop loss. Uh, but I noticed that because the S&P 500 is such a big number, then the profit is like it's like also big. I was like, oh my god, it's a gold mine. I could easily define the low, and I was like, the S&P 500. It does. I mean, it's very. I was so surprised. It does move very. What do you call it? Predictable.
Characteristically
Yes.
and predictable. Yeah, yeah.
Yes.
That
Eh,
is, and that's good. But I want to say one thing, and then I'll let you carry on. These currency pairs, assets can be predictable. They have a pattern, but you need to remember this: nothing works 100% of the time.
Nothing. Yeah.
That's why we have protection.
Yes. I
So
didn't
I'll let
have
you
I
carry
didn't
on.
have protection on my last
Yeah.
day. And you know what? I was greedy because I was trading only 5 shares of the S&P 500 at a time. Like I was buying 5 S&Ps, and I was happy with that. I had good profits. I kept the losses very small. And then on, I think it was the Thursday I was like, I think I'm ready for the next step. So instead of 5 shares, I increased it to 7 or 8. So the numbers moved more, like in a more crazy way. And I didn't have a stop loss, and I didn't even realize. Like I lost track of it for some minutes, and then my account was gone. I
What?
just the I received an email from the account. Oh, you what was it? It
Oh,
was,
the funded account.
yeah, the funded account.
So you blew. Oh, so the no more funded account.
No more funded account.
Oh shit.
I,
That's sad.
yeah, that's it.
Yeah.
But I guess
So
lesson learned.
let's. Yeah,
I
I
I
want to
need to
go
I
there.
need to write it here. I need to have my lesson here. Tattoo.
I want to go there now. I want to go there now. So after the dust has settled, and we can sort of laugh about it. I mean, it's good that you can laugh about it. It's good. You're not despondent and banging your head against the wall and all that stuff. So, what do we do moving forward now? How does this not happen again?
How this? Okay. Um, Good question. I think is again. I need to remind myself somehow have a stop loss before you enter any trade. Define your stop loss and keep
Okay.
it as
So
as
remember,
low.
yeah. So remember, I said about the trading journal
Yeah.
as your checklist,
Yeah.
like in an airline,
I
right?
didn't
As
have
a
my
pilot.
checklist. Yes.
So there it is. If you use this checklist now, full transparency, everybody, right? Because I know someone's probably going to ask. No, I no longer use a checklist. I am not arrogant and above by making mistakes, but I have memorized and it's ingrained in my brain of what I do,
Yeah.
right? And I have said to Isaac, "Oh, I lost this. What did you?" I say, "Oh, I fucked up. I didn't follow my rule." It happens to me, right? But the one thing is, when I enter a trade, I'm very particular, very specific at what I do. So I know why I'm going there. I know what's supporting me. I know how I want to get in. I have a very, very specific trade entry rule or rules.
Mm-hmm.
So so Isaac said the magic question. I got to remember to put a stop loss. I don't have to remember to put a stop loss because I always put a stop loss. Now, this is really interesting that you didn't have a stop loss in the funded account because a stop loss is a requirement for you to place a trade.
Is it? I don't.
Yes, it's one
Mm,
of the rules.
I mean,
You have to have a stop loss. Now you have you had a now you had a different account to me, so
stock
I'm not
account.
really sure. But I'm pretty actually. I'm 99.9% right. Believe that
I
you
was
have to
able
have a stop.
to
Huh?
do. I was able to place the trade without the stop loss, and I
Yeah, you can
actually.
place it, but
Mhm.
if they see it, they'll pull it.
Oh yeah, I didn't know.
Oh yeah. Oh, 100%. Yeah, they'll close it right off.
Mm,
Even if you're in the money, you don't have a stop loss.
yeah.
It's against the rules. Now, so I'm surprised that it was your funding account without a stop loss. So that's why I tell people to get a funded account because it helps you with those rules. Because you need discipline, right? So the psychology of these things, of following these things, the funded account makes you do it because if you don't do it, you lose it.
Mm-hmm.
Make sense?
Yeah.
Right? Better to lose a funded account that you only paid $100 for than to lose $10,000 of your own money
Yeah.
while you're working all this out, right? So yeah, lesson learned. Get now that trading
And
journal,
mhm.
when you enter your trades, follow that procedure of how you're going to do it, what it is going to do, and I have stuff that can help you, right?
And you know what? Actually, I think we can. It's a good time to uh, maybe have a look to of the have a look to the technicals because
Yeah.
I it wasn't like I blindly entered the trade, but
Yeah. No.
I there was a big candle that it was like for me it was like, oh my god, what is it? Yeah, I think it was here. I think around here. Let me. Yeah, I entered here thinking it was gonna bounce because it did here, and then because it did here,
So you entered,
and then
you
because it did
bought.
here, and
Yeah.
then because it did here. You see, it's been several bounces of this support. So yes,
Okay.
I bought here.
Can I say something about support and resistance?
Yes.
I want everybody to hear this. Support and resistance is there to eventually be broken.
Yeah.
If you remember that, go back to your chart again,
Yes, let's
right?
go
I want
back.
to remember this. Let's go back. Let's look at it. So this was what, about the fifth time the price has been there?
Let's see. Since January. Okay, January. What is it? January
Well,
7th. Well,
yeah, but it didn't go up. It didn't go up from there. It went down, right? So
yeah,
there's one.
yeah,
There's two. Next, there's two. There's three. There's four. Right now, keep going. There's five. You're at the sixth place.
yeah. And
Six.
even there's one small here.
Oh, okay. So seven.
Yeah.
All right. So where did you actually buy? I'm really intrigued. Where did you? How did you actually enter?
I
If you
can't remember
tell.
the exact level, but it was Yeah, I think one of these two candles.
Oh my God.
Yeah.
Okay. All right. So look,
So
everybody,
so
when
I
you're
enter
at,
here basically.
so you entered in the barroom brawl area and the no trade area because you've got a bottom blue line and a top blue line, right?
Yeah.
Remember this. Don't trade until you're above the blue line or below the blue line. And when I mean below, I mean a closed candle. For example, you see that green candle down the bottom past the
Uh.
blue line? There, right there, right. You see that red candle to your left? To your left, that one right there. It closed there, right? Then a new candle came up and hit, 50% of that previous candle, right?
Yes.
I would have entered on the low of that red candle that broke that blue line right there. And I would have sold because that blue line now is resistance,
Mm-hmm.
right? No,
Yes.
go, no, keep going how you went, keep going, right? Because I want to show you something. See, now look here. Now, I would not have bought there because it closed above, but now I'm looking to buy now. I'm looking to buy because now it's closed above the resistance level.
Yep.
And I just want a retracement. Am I going to get a retracement down to that 50% of that candle? I don't know. It's bouncing off that resistance level right now. But that was Friday, so I don't really count Friday. So we're going to see.
So
So,
sorry, this is why I didn't put a stop loss. I was so confident in my I was just so confident on the previous 7 supports.
yeah, no, I get it. But you can be confident, but you got to have a way out. I think you know that right now. Yeah, yeah. I go back to the chart again. Go back to the
Let's
chart because I want
go.
to say something.
Let's go
Is
back.
that a 15? Is that a 15-minute chart?
This is a 15-minute. Yes. I
Okay,
like the 15 minutes.
I don't want to rub salt in the wound,
Uh-huh.
but you must be fucking pissed that it went down and came all the way back up the way you wanted it
Oh
to go.
yeah.
Right?
That's worse. Yes.
Yeah. Sorry, that was mean of me. No, it's not mean of me because you know what? If you'd have waited, you would not have been in that trade, and you would be thinking about getting it in Monday, and you would have had that loss.
Yeah. Look at this.
This is
Crazy.
mindset stuff, guys. Mindset stuff, right? You know what I would be doing? I would be putting a pending buy on the high of that green candle.
A pending buy
Yeah,
on this one.
yeah. And where am I going? To the next blue line. That's where I would be going.
Yeah. You see, I was like very happy. Like I had the S&P 500 kind of very very well studied.
Yeah, no, I think you've got it. You definitely get that, but you've got to be aware of, you got to protect yourself, dude. You gotta, you can be. Remember, I said it's not about being right or wrong. It's about making money.
Yes.
If you'd have followed some rules there that I just basically gave you, you would be not have had that loss. You'd be patience again, right? Be patient, wait for the setup properly, and trade accordingly.
Now look at this one. This is the SPY-G. This is the S&P 500, but instead of 500 companies, these are the I think 200, the best 200 performing companies, which is basically the S&P 500, right? It does the same movement.
Wouldn't it be the S&P 200?
Yeah, right. But
I don't know.
something like that. Yeah, but it's cheaper. You can see it's $87 the stock.
Yeah, so it's a mini. It's a mini, right?
Yes,
It's a mini.
yes.
Yeah. There you go.
So this is the one I enter now, but I think I will this one I believe it for the long term.
Yeah.
And I think this is a good entry. You can see it's been following this uptrend line. It broke here, but it kind of made a second support.
Yeah.
And it's been following it. And then right now it's at this support.
I like it.
Yes.
I like it. But where would I buy?
Or you would buy, but because you traded, you would buy if it closes above this.
No, that's too far. Okay. You're kind of right, but look at the top blue line.
This one?
That one right there. So there's a red candle there, right?
Yes.
The higher that red candle,
you would buy.
I want to be above. I want a candle to close above there. And then I would start thinking about buying to the upside. You have to have momentum on your side. You have to have and again, I would put that there and I might be wrong. Right? But, we have to work on the premise of like what's happening. That right there, that green candle. Okay, go to META, because META is retracing from its down move.
Yes.
Right? So it had a down move, and now it retraced up, just like I said it was going to do, right? Because it's going to make a swing. Go to the daily.
This is the daily.
Okay. So where's the low? I think the red candle's the low, right?
This one?
There, right? Yeah. Right? Yes. So go from the high, draw from the high to that low, a line. Go from the high. Yeah, from there, yeah. No, to the red low wick, yeah. Now draw an up from the red low to that red candle high to the right of it. There you go. Now draw a down one past the first low you had. There you go. That's where you're going, dude.
Yes.
And you want to know where you're going? Put a Fibonacci on there. And target the 618.
From where the Fibonacci?
From the high to the low. You're on Trading View, right? Yeah, so you gotta reverse it, that's all. So there, okay. So where's the 618?
618 is here.
Yeah, just click settings. Yeah, that wheel. No, that wheel there. You got right there. And then see where it says reverse. Go down, down, down. Reverse. Hit that. Boom. Now get out.
Should I make it again?
Yeah. You got to do it from Trading View is different.
From the low to the high?
Yeah. So then it should. No, hit reverse again. Sorry. I don't use Trading View, guys. There we go. Okay, mark off the 618. Should have 618 down the bottom there, right?
618. It's here.
Okay, so redo it again from top to bottom instead of bottom. You did it from the bottom up, or did you do it from the top? Yeah. So redo. Sorry, guys. There we go. Okay, where is the 618? Above you?
Or should I target the low that we're thinking of?
No, you don't know where it's going yet, right? So
yeah.
This is what we're trying to find. So, okay, so you're doing it. Okay, so now, so you started at the top, right?
Yes.
Okay, so get rid of this one and start from the bottom again. I'm trying to get the extension down the bottom. There we go.
Good.
Right.
So which one we're looking at?
618.
618. Is this one?
1618. There it is, right there. That pretty blue line there.
There. So this one is the.
That's where I'm targeting.
Yeah,
look where it is,
nice.
Right by low. Look at that, beautiful, right?
Yeah.
So that's, to me, is where the Fibonacci extension is going to go to. So once you hit that Fibonacci extension, it's going to create another swing. So you want to get out. You don't want to keep waiting, because it's going to move up again, and it might move right the way back up to the first low, right? So no, the first low of the first swing. So you might be giving away a bit of money. So that's where I would target if I was there. And I think I gave you a final target of where Meta was going, I believed, right?
It is,
So
yeah, it is actually very, very. I was very confident on this type of swing when you said with the okay. First, you predicted this one, that when we reach this high, you said it's gonna start pulling back, which it did here, and
yeah.
then
Well,
you said,
let's go on the true chart. Why I said it. We're on the weekly, right? Go to the weekly, so people will understand why I said it was going to do that, right? And if you remember the reason why did I say it was going to come back? Look at those previous green candles. Neither, no, yeah, at the top there. See, 1, 2, 3. Those last three candles. No, from the top, yeah, those three right there. None of them had hit 50%.
mm,
And all I was doing was, okay, it's overextended, right? We got pump and dump scenario, and they have not hit their
the 50%.
50%. Now they've hit all their 50%. And if I believe, I drew a trend line, right? Draw an uptrend line from there,
From where? This one's.
from the low, no, down below, from the low of the green candle. There, yeah.
Which ones?
To the low of the, yeah, right there, right. So if this market's going to go further, it's going to break that, right? Make sense?
Yeah, yeah.
Right. So is there another 50% that we need? Is there, what else is there? Right? This could just be, like you said, a simple pullback, because now it could go back up. Now, what would make me believe it would go back up?
What?
Well,
It's I think also it's been a strong company, Meta. Like Mark Zuckerberg has been. They just released some good news that they're gonna. I think if we click here, let's see. Yeah. What is it? Oh yeah, they're here. Big AI power move. A standalone app to crush ChatGPTs. So basically, they're gonna be creating their own ChatGPT, which they already have like this integration of AI in WhatsApp, Instagram, but now they're gonna release their own AI platform or app.
yeah. Well, I don't think that's news for people to invest, because who knows what it'd be like. It might be shit, right?
Yeah.
So I think if they develop it and it's good, then great. But if you're developing something that's already been proven that it's good out there, and then they got a deep six or deep sex or something, I don't know, what was it?
Yeah, that's sick.
The new one that came out that was cheaper and everything like that, and everyone went crazy. So until you prove it, then I don't think. Me as an investor, I wouldn't be buying based on that anyway. But what I would do if I go back to the weekly, see the top blue line. Look at the red candle. See that candle there? The first red candle. Has that had a 50% retracement?
Nope.
Uh-huh. So we could be getting a 50% retracement. So what would make me believe that I'm going to get a 50% retracement? If I'm above the open of the second red candle.
If you're above the open,
Yeah,
if it closes above.
Yeah. So if you put a line right there and I go down to a 4-hour and I'm above there, right? Now I want you to measure with the Fibonacci. What's the 50% of that red candle, the first red candle? You can just guess it. Just place around about there, right? Yeah. So if I'm above, I think you need to go a little lower. I think your 50% is a little off.
Oh yeah. Oh.
Yeah.
I'm not a big good 50% calculator.
Oh.
Lower.
Yeah. There you go. I think that's pretty good. So if I'm above that red line, right, closed on a 4-hour, right? So needless to say, look what it is. It's the high. Pretty amazing, right? Look at that. Look at those down below. The high. There, right there. There's the red. So I want to be above that high closed. And then I'm going to trade it up to the yellow line. But I'm not just going to trade it up to the yellow line because look what I have on the daily. Red candle, not 50% filled. So you see where I'm putting lines in the sand?
Yeah.
And I'm saying, okay, you can do what you want, but if you fuck me up and go the other way, I'm going to adapt and I'm going to go here. So if I'm above that high, I'm going for that first yellow line. If I'm above that first yellow line, I'm going to the second yellow line to fill the 50%.
Mm-hmm.
And if I close above that last 50% line on that red candle you got right there, that top red candle, there, that one there, if I close above the 50% up there,
We're
I'm
going
buying
up.
to the upside. Yeah.
Wow. Great.
There you go.
Awesome.
What do I expect? I expect my bias is to the downside.
Yes. I think
Bias to the
I
downside to
also
fulfill
think
that first Fibonacci.
I also think we're gonna go to this one. No, I'm not sure about this one. Could be right. This is if you say the Fibonacci.
Yeah, is that the Fibonacci?
This
Yeah,
is the
whatever.
Fibonacci. Yeah.
I'm actually going to check my charts because I don't like your charts.
Oh.
I'm just not used to your charts. Not, I'm not being mean. But, yeah, I'm being mean. Oh, it's not gold, is it? No, it's META. Okay, hold on a sec. So I am going.
You want to share the screen?
No.
No.
Did I? Or do you want me to? Do you want me to?
Sure, yeah. Oh, just by the way, we're one hour and 20 minutes in. But
yeah, let me just quickly give you this. So my Fibonacci on that daily. Here's the price. The price right now, I have got. Actually, hold on a minute. What the hell is this? Oh, that's there. See, my daily is different to yours. That's scary. I don't like that. I'm not gonna. I think because the market is closed, the prices are not quite right. So if I go to the 4 hour, let's go to the 4 hour. You're on the daily, right?
we saw many. Yeah, I think with the daily was the main one.
No. Did you do the daily? I'm looking at 581.16 right now. 581.16. If the high of 68846 holds, if that holds, we're going down to 581.16. If it goes higher but doesn't close,
581. Mine shows 579.
yeah, close enough.
Yeah.
581, 579. So find a low there that's between those, and it'll be fine. That's what I think, anyway. So yeah, I don't have anything else. Actually, I have one level that I think I could go to that might turn around and go up the other way. And that level is, I'm going to give you right now. That level is there.
And that level is
drum roll, drum roll, drum roll. That level is 643.93. See, my charts are all screwed up. So because I have a low, I have a low already hit that, but on my 4 hour it hasn't. This is what happens with these charts sometimes when the market closes, especially my charts with stocks and stuff like that, is they're not accurate. So yeah, so forget what I said. We'll post it in Instagram. Well, I'll do it on Sunday, and I'll do a analysis and put it in there. But let's not give anything right now. I don't want to be wrong. But another thing. This could
What's
be
up?
as far as it goes, and then it. Did you hear that?
You cut out a bit.
This. Okay, what I'm saying is, this could be as far as it goes. It go to 64152, and that's it. It won't go any further. It'll start going back up.
Mm.
This might be as low as it goes.
Mm-hmm.
Right? That's sure. Because remember, we had that trend line, right? And I said
Mm-hmm.
the market likes to come back to the trend line.
Mm-hmm.
We're pretty close to that trend line right now, right? Actually, you're not seeing my charts, are you?
Oh, I do, I do, I do.
Son of a. Oh, you do see it. Oh, okay, all right. So with this trend line here, this has come back here. So now this could just be it. This is it, and then we're going back up. So we'll see. So if we go above this level here, which is the 50, we
Mm-hmm.
close above here, it's going up further. How much further can it go? Well, we got a 50% right here, right? So we can go to there. If it goes above there, well, I'm going up further. But we have to stay level here. You don't want to go up too high because the same thing's going to happen. It's going to make another high and it's going to come back again. They're going to do it, come back again.
Mm-hmm.
So I like this kind of stuff, not this kind of stuff.
Mm-hmm.
Yet if I look at the trajectory of everything, it goes up, comes down, goes up, comes back 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 down.
Mm-hmm.
Now, until this break, okay, here it is. Here's what I'm going to say. I'm not going to go down any further until it breaks this low trend line. I want to close, test it, and then I'll trade it down to here. I'm not trading it down until it breaks this.
Yeah, you think
Does
it's
that make
gonna
sense?
create a lower low?
I don't know.
Okay.
I don't know. So listen to the words. I am waiting till price breaks this blue line at 63521 and also breaks this
Trend line.
orange trend line. Has to break and close underneath it. It has to do the magical, here is a candle closed underneath.
Mm-hmm.
And I would prefer it to be the daily.
Mm-hmm.
I would want this.
Mm-hmm.
Then I would want a retracement, and then I would put a sell right on the low of that candle that breaks past these things, and I'd sell it down to here.
Mm-hmm. All right.
And then once it does that, then I'll see. But that's what I would be waiting for. So no more
We'll
selling
see.
until that happens.
We'll see next
Yeah.
week.
Yeah, we will. Well, we might see earlier. Might see on Tuesday.
Yeah.
You never know. Right? But if this holds, right? Because this right here, this blue line here is right at resistance, support. We got a low right here. This level holds, it's going back up. If it doesn't hold and it breaks, it's going down. Levels again, everybody. Levels. Levels 101. All right. I think we're good.
Yeah.
That was fun. That was enjoyable. Hope everybody enjoyed it.
Yeah.
Hopefully it made sense for everybody. And again, keep these questions coming. And so I'm off to make a video. So I will do that today.
Great. All right. Yeah. Yeah. It was nice. It was entertaining. I really like looking at the charts, to be honest.
Yeah, everybody likes looking at the charts, and the reason why everybody likes looking at the charts is because that's where money's made in your mind, right? Because you're plotting, right? So you're plotting things. If this does this and this does, your automatically brain says, "Oh, I'm making money now," right? It's psychological again, right? So yeah, I like doing the charts. I like analyzing anything. So
Yeah.
it's fun. All right, everybody. Thank you very much. Hope you enjoyed it. Please throw in those questions if you have questions. Isaac, been a slice. We'll talk to you soon. Take care, everybody.
All right. See you next week.